Most traders obsess over where price will go, but the market doesn't punish traders for being wrong about direction. It punishes them for being wrong about timing. Entries too early, stops too tight. Targets hit, but not when you expected. And that's because almost no one measures how long price usually takes to reach a level. This indicator does. Right here is a tool that doesn't predict price direction. It measures the statistical time distribution of how long price historically takes to reach a given distance. Not guesses, not intuition, time probability. Today I'll show you how it works, how to read it correctly, and how to use it to improve entries, exits, and trade management. Let's break it down. If you've ever been stopped out just before price moved exactly as planned, this explains why. Added on TradingView by searching First Passage Time Distribution Analysis by Enrique Sentiero. Once applied, you'll see a distribution curve and statistical bands tied to price movement. This indicator measures the probability of price reaching a specific distance within a certain amount of time based on historical behavior. In simple terms, it answers the question traders never ask: how long does it usually take price to reach this move? Instead of just asking if price can move, you now know when it is statistically likely to happen. However, just trading signals like this is a recipe for disaster. You need tools that do more, like setting optimized trade targets, identifying volume, and filtering out bad signals, so you only catch the most explosive moves whilst avoiding sideways range. That's exactly what my tool does. And the best part, it's 100% free at the moment. So click the first link in the description and get free access while you still can. Most traders get timing wrong, not direction. This is how you fix that. This indicator is not an entry signal. It is a timing and expectation filter. You use it to avoid entering too early, avoid unrealistic targets, avoid holding trades past their statistical edge. Think of it as a clock, not a compass. Now let's turn this into something you can actually trade with. Step 1. Define the move. First, identify the price distance you care about, a support to resistance move, a breakout projection, a stop to target range. The indicator now evaluates how long price historically took to travel that distance. This is where most traders unknowingly destroy their expectancy. Step 2. Read the time distribution. On the indicator panel, you'll see a distribution curve showing most likely time window faster than average scenarios, slower than average scenarios. This tells you when price usually reaches that move, when it becomes statistically unlikely. Key rule: if price hasn't reached the target within the high probability time window, odds drop sharply. That's your warning. This single rule eliminates over 50% of bad trades. Step 3. Entry timing filter. You do not enter just because price breaks a level. You enter when price breaks structure and time elapsed is still inside the favorable probability zone. Invalid entry. Late breakout after most of the time distribution has already passed. Valid entry. Early breakout, where time probability still supports continuation. Now here's how professionals use this to manage risk. Step 4. Stop and target adjustment. Use the indicator to adjust expectations. If the distribution shows fast completion, then tighter management. If distribution is wide, then allow more patience. Critical rule: when price exceeds the expected time window, reduce size, tighten stop, or exit partially. You're no longer hoping, you're reacting to probability decay. This is how you stop holding trades that already lost their edge. Valid entry. Early in the time distribution price aligns with directional bias. Time probability supports continuation. Invalid late entries. Chasing extended moves, holding past statistical expiration. This indicator doesn't say you're wrong. It says your timing advantage is gone. Now let's tune it properly, because timing differs by market. Just before we get into the best settings, don't forget to claim 100% free access to our AI indicators that catch the best moves across every market and time frame. Get instant access using the link in the description below before it's too late. Forex. Use longer look-back periods. Forex respects time symmetry and mean behavior. Crypto use shorter distributions. Crypto moves fast. Time decay happens quickly. Stocks medium look-back. Earnings and sessions distort time behavior. Indices. Default settings work best. Indices move in structured, time-based cycles. Gold longer distributions. Gold moves slowly until it doesn't. If you're tired of being right too early or too late, this indicator gives you the missing dimension, time. Thanks for watching. I'll see you in the next one.